complement India. And it is this complementarity that we have been able to leverage, I think, smartly.
You know, you mentioned the decisive leadership, and you refer to the Prime Minister. And maybe this is not something I should ask you, and maybe you can't respond to me. But I want to ask you, what is the mandate that your boss gives you? Like, Piyush, go and get this signed.
No, why can you not ask me that question, or why should I be hesitant to answer that? Because this is a journey in which your boss gives you complete empowerment. Your boss trusts you. Your boss knows that you will work as a team with a whole of the government approach. You'll protect India's interests at every point of time, and you'll get them a good deal. So I think having a boss who trusts your capabilities or your ability to look after national interests is all that it takes to encourage you to go out there and get it done.
Now, you know, I was thinking about this recently that, you know, as a trade minister, you have to negotiate with external actors, and you have to, of course, with the counterparts in other parts of the world who obviously are also serving their own national priorities. But you also have to take everyone in India along, the states, the SMEs, the different segments of society. And there is a domestic negotiation also involved. And that was sometimes difficult in India in the past. So I just want to understand, what is the Piyush Goyal mantra of creating consensus at home as well?
Samir, that's a good question. In fact, my journey as a commerce minister started exactly on this same note. I took charge of the Commerce Ministry on 1st June 2019. And some of you may recall that the previous government, around 2012 or so, had thrown India into negotiating on the negotiating table with the RCEP nations. That's the Regional Comprehensive Economic Partnership that originally India was not a part of. Actually, it was an agreement between China, the 10-nation ASEAN bloc, Japan, Korea, Australia, and New Zealand. India was not a part of it. I don't know for what joy and under what pressure and for what reason the then UPA government, that's the Congress and the DMK and the Trinamool Congress and the Samajwadi Party, that coalition of parties, what was it that prompted them to put India under the bus, and I say this with full responsibility, to become a part of RCEP? When I took charge in 19, several rounds of negotiations had happened over the years, and I started thinking to myself that even in 2012, India already had a free trade agreement with the ASEAN bloc. We already had a free trade agreement with Japan and Korea. We were in active negotiations with Australia, almost on the verge of concluding a deal with Australia at that point of time, which then they aborted in 2013. For what joy, I don't know, because that said now RCEP will continue. And New Zealand at that point, our bilateral trade was only $300 million. So really, when we talk of RCEP, it was a free trade deal between China and India. And I don't know if anybody in this room believes that would have been good for jobs in India, for economic activity in India, for fair play in India. It would have been disastrous. So when I took charge, I started meeting stakeholders. And you won't believe it, Samirji, what I found. That in the earlier trade deals, Japan, Korea, ASEAN, the few that was done before the Modi government came in, the Congress party and their ilk had barely consulted Indian industry. There was barely any consultations. Decisions were made in Delhi by the government without involving all stakeholders. I did 200 meetings, ladies and gentlemen, between June and October, across the length and breadth of the country. And you won't believe it, only 3 engagements. And these meetings were either with chambers of commerce or with sectoral interests. So I'm meeting the steel industry, I'm meeting the agriculturists in another place. Only 3 sets of people out of 200 said that we should join ourselves. And it was a clear signal. The stakeholders clearly spoke their mind and gave us the direction as government that this deal is not good for India. We don't want it. And it took courage of conviction, which our Prime Minister has in abundance, that he stood on 4th November 2019 in Bangkok before world leaders and said, the RCEP is not good for my country. I refuse to be a part of RCEP. And we didn't enter into that so-called free trade agreement with China. So for us, stakeholder response, stakeholder consultation and feedback is extremely important. In every FTA that we do, the amount of consultation between line ministries and the Commerce Ministry, between line ministries and their respective stakeholders, Commerce separately talking to stakeholders, is an elaborate process. And we have now probably 30 conference rooms in Vanijya Bhavan, the Commerce Office. At points of time, we are negotiating with 3 or 4 sets of countries. And in the other rooms, we are doing stakeholder consultations which feed into the negotiations. It's like a whirlwind over the last 2 or 3 years. And friends, I can assure you, these 9 free trade agreements, I can say it on record, with all the courage that I have on my command, with all the responsibility that I hold as Commerce Minister, not a single trade deal, not a single trade deal has India compromised on any sensitivity of any of our stakeholders. And in all of the trade deals, we have protected national interests. We have opened the doors to greater engagement. We have kept in mind sensitivities as well as a realistic approach that ultimately a trade deal has to be good for both parties. You can't you can't
find the sweet spot.
Yeah, it can't be that everything I want you open in your market, but I will open nothing in my market. In fact, my approach is that ultimate stakeholder in any negotiation is the consumer of India. We have 1.4 billion consumers. They also have a say. Very often my daughter tells my wife, Papa also has a say in the family. This is somewhat like that. The stakeholder, as consumers as stakeholder, also have a say. I mean, after all, if Maruti hadn't come into India along with Suzuki, would you all be happy if India only had ambassadors and Fiats, Premier Padminis at that point of time? Fiat had also gone away by then. Or for that matter, if now in an economy which is growing, prosperity levels are growing, where we have higher incomes, where we have more consumer choice, aren't we better off having Hyundai manufacturing in India and Kia manufacturing in India and Suzuki and Toyota and Mercedes-Benz and Skoda, with all of them coming to India? I think as consumers we have choice. That keeps inflation down, that gives you high quality, high efficiency, which provides jobs to our youngsters. Millions and millions of people are engaged only in the automobile sector. And going forward also, this industry, this demand for this industry is growing at 8% every year at an aggregate, 8% compounding. So you can imagine how much more scope we have to create jobs. Now, if you will look, and I urge some of you to do a research, you'll find some very interesting statistics. Auto sector, because we have opened it to competition and allowed more companies to come in, and initially they may even export the product to test market. Once they export and they find the sweet spot of what sells in India, ultimately they will have to manufacture in India. Which European car at $50,000 per capita, in Germany probably even more, can compete in the Indian market producing at those high costs? But if initially they can sell, say, 5,000 cars or 10,000 cars, test the market, find there is traction, there is demand, and then come and manufacture here, we are better off for it. And they are better off for it also. So our approach is add to the competition in areas which are high-tech, in areas where we can benefit as a nation, create more jobs as a nation, bring innovation to India, produce at scale in India, not only for the Indian market, which is big, but from India, help them sell to Africa, help them sell to Latin America, help them sell in Asia. And therefore our approach has been create a worldwide web of trade partnerships so that we are a part of many global value chains seamlessly, goods moving in and out of the country, and all of this ultimately creating huge amount of jobs directly and indirectly. And that is the larger approach which has helped us do all these partnerships.
And now you, of course, have the GCC and Canada and a few others already on the way. But let me ask you, sir, the organizing priorities for any particular agreements that you move towards, is it what you seek in terms of sectors, or is it the size of the market that attracts you?
Very interesting question, Samirji, and I think friends who are participating in Raisina Dialogue will be happy to know. In every agreement, we have tried to bring balance, often with non-trade issues. Let me give you a sense of how we negotiate. I was doing the free trade agreement with the 4-nation EFTA bloc. That's Switzerland, Norway, Liechtenstein and Iceland. Now, I talked to them and I said, look guys, already most of the products that you import are duty-free in your country. What you are importing. Your people are already satiated. They have good clothes, they have good cars, they have good homes. They have all the basic needs of life. So what is opening up for me? What do I gain by opening my market or giving you access in my market? What is my corresponding gain in your country? It's minuscule. Of course, the threat is also minuscule.
Correct.
There's no threat also that they can dump any goods here because they are so expensive. And $100,000 per capita income in Switzerland, today probably $104,000 or $105,000, or $200,000 in Liechtenstein with a 40,000 population. They are no threat to India. But what do I get in return? Also, 25 years from now or 22 years from now, India will be a $30 trillion economy. At the growth rate, scorching pace of growth that our hardworking Indians are working on. Now, I'm giving you a delta of opportunity of an economy which grows from 4 trillion to 30 trillion. That's a $26 trillion additional delta of opportunity.
Correct.
You add any growth rates in your country, whatever you like to add, all 4 nations put together. Of course, their growth rate is hardly big. And then I look at IMF numbers and all. I said, 25 years from now, you barely cross $5 or $6 trillion. The delta of opportunity that you give me is so small that you'll have to add some other factor to balance out the deal and make it good for me. So now we have an agreement with these 4-nation EFTA countries where they will invest $100 billion, $100 billion foreign direct investment. It's not as if the Norwegian pension fund, Norges fund, can put $100 billion into the Indian stock market and say our commitment is done.
I think he would have met you. He is also here.
I haven't met him. Okay. Now I met him in Norway. But that's not a part of this deal. They can invest a few $100 billion. It'll be good for them. But this deal entails a commitment of $100 billion that these 4 countries have to invest in India in a defined time frame. And this is only foreign direct investment. That is long-term money, which we need. It has to create a minimum of 1 million direct jobs. And I think a $100 billion investment in FDI, when you take the Indian partners investment, take bank credit, take the ecosystem that develops around it, will seed a $500 billion investment. It will at least encourage a $500 billion investment creating maybe
Huge economic
5
benefits.
million jobs in India. Now, that helped us to bring balance to the agreement.
So
Same
you opened
thing
up the
happened with
market,
New
and
Zealand.
you opened up the market, and they are investing into your
Exactly.
country.
And by the way, if they don't invest, I can claw back the benefits that I've given them in the free trade agreement. So same thing happened with New Zealand. They also don't have much of a market, small economy. In the last 25 years, New Zealand has only invested $70 million. Please be clear, it's $70 million is their FDI in India in 25 years.
Okay.
In the next 15 years, they have committed to invest. It's a legally binding commitment. $20 billion. That's about 300 times
More than what they've done in the last
in
25
the last
years.
25
Wonderful.
years. But that's a part of the agreement to bring balance. UK, I said you're 4 trillion, I'm 4 trillion. I'll be 30 trillion, you may barely reach 8 trillion. So what do I gain? Half your products are already duty free. So my gains are in only half your products. Your average rates are much less than mine. So what did we get in return? Our young men and women who go and provide services in UK, they were required to pay social security, 25%. And that money would go waste because these kids usually go for 2 years, 3 years. Infosys may get a contract, they may work for 3 years and come back. Somebody may go as a chef, work for 3 years and come back. Now that money goes waste because unless you work 10 years, you don't get social security in UK. So now if you go for 3 years, that social security money which you used to pay there, you can pay into your provident fund account in India.
Wonderful.
It'll be your savings and it'll be the money of the Indian who's put his sweat and blood and toil to serve the UK economy. That will not get wasted, it will come to his savings account. So with every country, we are trying to balance agreements. If they are smaller than us, of course, if they are much, much bigger than us. Well, Raisina Dialogue makes India proud. It has truly established itself on the global stage as a must-attend event. Very high quality discussions, very high level of participation, both from India and internationally. And I must compliment my dear brother and friend Dr. Jaishankar, Mr. Samir Saran, and the entire team working on Raisina Dialogue for the fabulous work they've done. We need more engagements like this across the length and breadth of India to showcase India to the world. These engagements help build bridges of trust and friendship. And in this day and age where we are looking at globalizing the Indian economy and expanding our trade, particularly reaching out to the developed world with our offerings, I think such engagements will hold us in good stead.
So yesterday you said that students from abroad should be now coming to India to study probably half,
Well, that will be good for the students or the children from the developed world, because the future is in countries like India. The future economic growth is going to be led by the less developed countries and the developing world. And children in the developed world live in a very different atmosphere, get an exposure which is limited to their own world. If they were to spend 6 months a year in India, they would actually have a much more rounded personality. They would learn to deal with the challenges that the developing countries or less developed countries have to face, and that will actually prepare them for their own careers very well.
So in context of West Asia conflict that is going on, sir, what is the current insight into the trade that...
I think Dr. Jaishankar is the right person to respond.
Any economic security reforms or about multilateralism, any global governance reforms?
We have the WTO ministerial coming up end of this month. We'll discuss these issues with an open mind during the WTO
There
ministry.
has been a statement from US that we have been good actors.
Are you from the press?
No, I'm not.
Thanks.